4 reasons why Bitcoin is likely to tank below $16,000 over the next 7 days. Today, we're going to break down the technicals where the fundamentals are already baked in, starting at a high level, and then I'm going to break down the detail of how I'm shorting Bitcoin over the next 7 days. So if you like today's video, like, subscribe, hit the bell notification. Let's dive straight into Bitcoin. We are looking at Bitcoin on a 60-minute chart. The first thing you want to know is that markets tend to move in 5s and 3s. So the first of the 4 reasons Bitcoin's likely to go below this low over here, which is what's going to hit $16,000, is previously we've seen Bitcoin hit a nice 1, 2, 3, 4, 5-wave pattern to the downside, and it looks like a very clean A, B, C correction, right? So that's reason number 1. Reason number 2 is actually the momentum. Momentum tends to coincide very nicely with price action. And if you look at the dashboard at the bottom, where is the momentum right now? Well, the bigger trend on the daily chart is strong bear downtrend. So the market's obviously been moving up recently, but the momentum is at a top. So some selling pressure is due to come in, right? It's due to come in from a technical perspective. The third reason is if we look at the 4-hour momentum, it's also on a bear downtrend, but I've also just put in something called the stochastics RSI. This is a momentum indicator, this blue and red line. I've just put it in as an image, but we'll see this blue line crossing below the red is why this is saying a bear downtrend. That's what it's based on. But look at this. This point here to this point here is making a lower low on the momentum, but the price has gone up. That's what you call a bearish divergence. That is one of the early signals that selling pressure is going to come in and then the buying pressure is struggling. So bearish divergence is a massive clue and an early signal that we're likely to see Bitcoin move towards the downside. There is a fourth reason which I'm going to cover with you as well in a bit more depth. But if you want to get access to this trend identifier dashboard, because what it tells us is that we should consider selling. In other words, taking profits and looking for short positions. And this is purely based on momentum. And then we want to add in the pattern. We want to add in the bearish divergence. And then what we're going to look at is price ratios. So if you like the sound of having that dashboard, you can now actually trial it, test it for £1, 30 days. We've worked incredibly hard because I've been using this for around 15 years now. Very powerful indeed to add to your current trade strategy, to always trade in the direction of the trend, whether it's up or whether it's down. So you can now check it out. The link's below. £1, 30 days. If you like it, is then £9.97 thereafter. Very, very powerful. All right, so what we're going to do next is I'm going to break this down. We're going to set some price targets. The way I like to trade is there's a paradox of trading. It's you have to assume you're right and wrong at the same time. So then you can have very effective, powerful risk management. And you can also be in the trade for a bigger degree move in terms of if the trend really unfolds. So what we're going to do here, I'm going to tell you the fourth reason. The fourth reason is something called Fibonacci price. These waves, fundamentals are baked in, but it's all around fear and greed and how the market is feeling and what the market believes the true value of Bitcoin is. That's what price is reflecting effectively. So when you see a big movement to the downside like this, one of the most common ratios is that it retraces up to 50, 62, and 78.6% retracement. Now, if you have never heard of Fibonacci ratios before, or you just heard of the basic stuff, I've actually got a masterclass, 4 secrets. It's free. I cover it in a bit more detail. And I tell you that because I'm going to go over this at a relatively fast pace. So feel free to pause it, take the masterclass, come back, or take it at the end. It's very, very powerful. So I'm just going to do these retracements. Now, you'll see these lines drawn, but these are psychological resistant levels. And we want to really pay attention to these because these are leading indicators that can give us very valuable information. So the 2 key ones that I just want to pay attention to, I'm just going to talk about them as lines, is really this zone over here. And we've exceeded this zone over here. And then this zone over here. So we're basically in a Fibonacci ratio zone, which is telling us we're probably going to see some resistance and we're due to have a continuation to the downside, right? So they're the 4 reasons. Now what I'm going to do is I'm going to show you the minimum expectations on how I'm shorting this, how we're going to make money on the way down. If it unfolds, we're going to see also what we're willing to risk to find out if we're right, and what are the minimum expectations and the absolute expectations if the trend really unfolds. In other words, if we get another big move like this as well. Also, just keep note that tomorrow we have the consumer price index announcement. That's a big piece of news that's impacting every market, and crypto, it impacts it massively. So we're probably going to get a massive amount of volatility, but we tend to get reversals around CPI. So CPI is happening tomorrow. So tomorrow we're probably going to get a big move to the downside that's going to coincide with that news announcement. All right, so let's now I'm going to clean this up. We don't need this no more. We don't need these no more. That can just stay there. All right, so what we're going to look at is, what if we're wrong, right? So that's how I always think about trading is, okay, let's not get overly optimistic. So the expectations are that the trends are going to continue to the downside in some type of 5-wave move. That's the thesis. That's the business plan. But what if this doesn't happen? What is the minimum that would happen if the trend was to continue to the upside, right? To the upside. So we're going to look at that. So markets tend to move in 5s and 3s. So if you just think about it logically, if a market moves in 5 waves to the downside, well, you have to have the first wave, the second wave, and the third wave. And then we may get a fourth and a fifth, or it might end up just being a correction and the trend continues to the upside. So what I like to do is estimate that there's a minimum movement even if the price is going to continue to the upside. So what we can do is make sure we're taking profits and become risk-free at this point, if that occurs, right? So I'm going to draw that in detail in just a second. So that's the minimum expectation, risk-free, tight trade management and risk management. Then what's the trend expectations? If it does continue, we've got the bearish downtrend on the daily chart. We've got the 4-hour bearish as well. Again, we've got this ABC pattern. If we do get some type of big move to the downside, we're probably going to see a continuation. But how far to the downside are we going to get a continuation? Or the high probability price zones and time zones? Well, let's just look at that now. So I'm going to draw this out. I'm going to do it relatively fast. What we're going to do first, let's just do the minimum expectations. Again, I know I'm talking fast. Everything is difficult before it's easy in life. So again, if you haven't already, take the 4 Secrets Masterclass. It will just fill in the gaps on how to do the real foundational Elliott waves and how to apply Fibonacci price, because that's what we're going to do now. And in the masterclass, I cover it in quite a bit of depth. So what we're going to do is we're going to assume we're wrong, and we'll just do the market is likely to at least move down to these price zones. So if Bitcoin gets towards 16,900 and then even the 16,500, at these points, I want to be risk-free, right? So we don't want to get overly optimistic. And at this phase, it will probably be 3 waves. It'll probably be, we'll probably get some type of 1, 2, 3, 4, 5, some type of move to the upside, and another 1, 2, 3, 4, 5. And at this point, we won't know what the outcome is going to be, but what we do know is that if we're wrong, the minimum has been met, because we will call this a wave 1 or a wave 2 or B, and then this could be a wave 3 or C. In other words, it could be a correction or it could be a new continuation to the downside, right? So that's first objective, is get risk-free. Now we'll probably get risk-free much sooner. We'll probably get risk-free around here, moving our stop loss to break even. But I want to lock in some profits over here, early profits, maybe move our stop loss to over here if it unfolds like this. And I would like to exit half of my position and bank some good profits. So even if we're wrong and the trend continues to the upside, we've made some good money, right? We've made some good money. But now what I'm going to show you is what is the expectations if it unfolds as we anticipate. So if I just zoom out like this so we can see it. So that was I call it unit 1, or half the position. Now we're going to talk about what are the trade expectations. So really what we're going to rely on is this movement. This is the big clue. This tells us what was the previous selling pressure and how far the price came down, we can use particular Fibonacci ratios that then tells us what is the high probability price zones that are going to be reached if this low gets exceeded. So if this low over here gets exceeded. Yeah, hopefully that makes sense. So I'm going to keep it quite simple. There's a few things we can do here, but I'm going to use the trend-based Fib extension tool on TradingView. And what we're going to do is we're going to literally measure. Now we have to make a little assumption. The assumption is that this high is going to hold. Right? That's not confirmed yet, but we just have to make a forecast or a projection for our business plan. We just have to make that assumption, and we can edit it as the price data unfolds. But the two key numbers that we want to be aware of is what's called the 100% or 100% price extension. This is the $15,400 mark. That was the reason why we said below $16,000 with Bitcoin. This is exactly why, right? It's not pie in the sky numbers. It's just highly probable, especially if the price goes below this low. If the price goes below this initial, what's called a swing low, that will be a nice strong confirmation that this high is likely to hold. If this low gets exceeded, that's going to be a stronger signal. And then if this low gets exceeded, which is close to the previous one, it's an even stronger signal again that we're going to get a follow through into this price range over here. So now let's just break down this price range. So we got this zone and this zone. So how I'm seeing this unfold is initially some type of three-wave move like this, where this low hasn't been exceeded, exit half of our position over here to lock in some profits, at least make sure we're risk-free. And then if the trend continues to the downside, we'll probably get an extended wave. The wave threes, which is the third wave, tends to be the extended wave. We'll probably get some type of wave 4 and then some type of wave 5. And then if, and it is an if it does unfold like a 1, 2, 3, 4, and we're coming towards some type of wave 5 zone, similar to this movement, or even an extended version of this movement, then we'll be looking to have a logical process of managing our stop loss. The most simple is if this breaks down into some type of 5-wave sequence and we get these swing highs, we will adjust our stop loss to these swing highs. So we're locking in more profit, locking in more profit, locking in more profit. The momentum dashboard will probably say oversold, and this may be oversold as well. And here it'll probably say consider buying. So that will tell us that the momentum on the downside is now limited. So this will tell us in advance that that's likely from a momentum perspective. We will look at the pattern position. We will look at the Fibonacci ratios. There's a couple of other factors as well, but it's really likely to be 7 days. And that's what I'm going to finish on. The 7 days. Why 7 days? Well, what's really powerful with this is that what's previously happened tends to happen again. It gives us a nice indication on the buying and selling behavior because it's normally the same actors, the same people that are buying and selling. Not exactly the same, but similar. So how long did this downward movement take? That's a big clue for us. And the answer is around 6 days. So we can use down here, this is called the trend-based Fib time. And by the way, I cover this in a lot of depth in the 4 Secrets Masterclass. So if this is kind of frying your brain a little bit, just know that everything in life is difficult before it's easy. And that's why I've created this masterclass to really break it down to layman's term. And when you combine it with the trend identifier, which is actually secret number 1, it just takes your trading to a whole new level. So let's just do the trend-based Fib time. So we're just going to measure how long did this movement to the downside take, project it from today, which is not confirmed as a high, but is likely to hold, but it's not confirmed. And the real date that we want to know is this line over here. And we're talking about the 16th of Jan. So 5-6 days of sideways to down. Now, it could be longer, it could be shorter, but it just gives us a nice indicative feel that the expectations for Bitcoin is we have a price zone of $15,400 to around $14,000. It might go further, but again, we will just go with the trend and go with the flow and see how it unfolds. So what do you think? Did this make sense? Right? So we've got the 4, we've got the momentum, we've got pattern, we've got price, and we also saw bearish divergence on the 4-hour time frame, which indicates, many things indicate we're going to get some type of move to the downside. We got CPI tomorrow. CPI there tend to be key reversals happening around CPI. So that also gives another indication. Now we got to be careful with CPI because when that is announced, the markets get very volatile. So ideally, I want to be risk-free or out of the trade before the CPI announcement. So I'd like to see Bitcoin really move to the downside, trigger me into the trade, ideally get risk-free, possibly even lock in some profits. And then when CPI happens, I don't need to worry about the volatility because if it goes against me, I'm risk-free. If it goes my way, it really goes my way, which is going to be fantastic for our particular trade. So do check out the Trend Identifier dashboard. I'm telling you, it's very, very powerful. £1 30 days. You'll absolutely love it. It will just take your trading to the next level. Let's finish on a quote. And by the way, if you like today's video, like, subscribe, hit the bell notification. I'm going to be bringing you massive value in 2023. We're going to take things to a whole new level. All right, chapter 2 is relevant because we're talking about risk management today. Minimum expectations and maximum expectations. Now, we also never know the maximum. Hence, I personally never take profits at a fixed point. I always use something called a trailing stop loss, or we move stop losses on swing highs because the market can and does overextend, right? Especially when there's big news announcements. So we don't know how much it's going to overextend. So I don't want to take profits at fixed points, but I do want to lock in profits by adjusting my stop loss as I'm locking in profits. So if it does move up, stop loss gets triggered, profits get exited, which is fantastic. So we're going to go with chapter number 2 today. It's Warren Buffett. He says, rule number 1, never lose money. Rule number 2 is never forget rule number 1. Now, we can never in trading not lose money. It's just a part and part of doing business and the cost of doing business when it comes to trading. But what we can do is control risk exposure or capital exposure. So I'm risking 2% for this particular short trade. And if it unfolds and there's compounding opportunities, we'll compound new units as we get risk-free. So that's fantastic. So we can control that. And we can control our risk management strategy where we can get risk-free at a logical way, which is repeatable and recordable that we can do in a consistent manner. So let's keep a very close eye on Bitcoin. Let's see how CPI impacts it tomorrow. But the likelihood is we are going to see some good movement to the downside and over the next 6 days, likely to go below $16,000.